What's up, Mortgage Coach community? Dave Savage coming to you live with Dale Vermillion. What's up, Dale?
Hey, Dave. How are you, man? Good to be here.
It's good to have you here. Every time I talk to you, I get valuable takeaways. I've got a lot of feedback since the last couple of interviews having you in the Mortgage Coach community, how much people want you back in this community. So thanks for making time, brother.
Nice to hear it. Thanks for having me. It's an honor.
Yep. So guys, anybody who doesn't know who Dale Vermillion is, just make note. He's one of the industry's top trainers and leaders. I think an area of expertise where he is unparalleled is just having that rate conversation. He has been a master for many, many years, for multi-decades, over 20 years. It's just how to deliver value to a consumer versus how to deliver rates and fees. And when you're dealing with a consumer that's just solely focused on what's your rate, what's your payment, he's a master at how to turn that into a value conversation. So I have been hearing from the Mortgage Coach community that you guys are killing it with refis. It's a tidal wave. But I'm also hearing that there's a lot of reasons why that consumer wants to talk rate. You know, everybody's shopping. They're getting inundated with a lot of different quotes, content. Let's face it, the minute they start looking for a loan, their alerts and triggers are coming after them. So Dale is just gonna walk us through how to have a better conversation. What are some of the do's? What are some of the don'ts? So Dale, any way you want to frame that before we get into it?
Yeah, I think you said it really well, Dave. I mean, the thing we need to understand is that, we're living out right now Charles Dickens' A Tale of Two Cities. It was the best of times and it was the worst of times. Because here's the fact of the matter. When rates go down like they do, I mean, we're in historic rate lows right now, leads go up and rate sensitivity goes up, because it really shouldn't work that way when you think about it. It's really the opposite of how it should be. You would think as rates would go up, consumers would get more focused to try to drive down to the lower, but it's not how it actually works. What happens is when rates start to become a media event, then consumers start to make a big deal over an eighth of a point. And the fact of the matter is, I've taught this for 25 years and I've believed it for 37 years I've done this. Rate don't matter. It's never about the rate. And here's the reason why. And I'm going to start with this very simple philosophy and foundational principle. Price, which is rates, points, and fees in a mortgage, is what you pay. Value is what you get. And it's never what you pay for something that matters. It's always what you get. And that is very true in every transaction. Every one of us buys things every day of our life. We pay more for them than we should. We know we pay more for them than we should, and we willfully buy them anyway and then justify and rationalize it the whole way home. If you got a Starbucks cup in your hand while you're listening to me right now, you're paying too much. You know it, but you're willing to do it. A mortgage is no different. In fact, a mortgage is even more important because getting a good mortgage is the key, not getting a low rate mortgage. It's always about getting the right kind of loan.
Love that. And that reminds me of yesterday's quote with Amber Kavark. Guys, this interview was amazing. And she did a whole rant on, she said, you know what? I learned early in my career, my coach taught me that there's 5% of my clients that want to pay more. Like if I'm the cheapest, they're pissed. They're looking for, I want the most expensive. And there's 15% of my clients, she's like, I don't care how cheap I am. They want to do it themselves and they want the cheapest provider and they're going to grind. And I'm all about that 85%. And Dale, I see you nodding because I've heard your version of that. And Amber, you were trained well. That is so true. I want to frame this conversation around one more thing before we get into the rate. And here's my message to every loan officer on this call right now. Guys, you're doing a lot of loans. You're doing a lot of transactions. And you have a choice. Are you going to do a lot of loans and a lot of transactions, or are you going to create a lot of clients for life? People that are so pumped about the value that you gave them that they're not doing it for you. They're referring their friends to you because they consider it a favor for their friend. Like there's like, if you can deliver refis at a higher value, yes, you will have less price exceptions. Yes, you'll have better conversion, but more importantly than that, you'll create clients for life. And so we're going to I'm going to interview and get everything I can out of Dale. But I don't want you to just think about, oh, I want to win the deal. Guys, I want you to be the most valuable loan officer that family has ever seen, and you get more referrals. So Dale, with that said, where do you want to start? Where do you want to start going through this and unpacking it?
Well, let me start with this, because you triggered a really important point, Dave, and it's this. What I see the most, you gotta remember, I've trained 1 million mortgage professionals in 25 years. I've been around this game a long, long time, worked with 600 lenders. And what I've seen time and again in markets like this is we as loan officers tend to move into very much of the order-taking mindset mode. And what that means is we stop building value. We stop building relationships. It's transactional versus relational. It's, hey, how quick can I get through this deal? Offer a quote up, take the deal and run. And you said it so well, Dave. Zig Ziglar had a great quote. He said, anybody can get the first sale. It's the repeat and the referral sale that truly makes a fine salesperson. And I believe that's absolutely true. So here's the deal. Today's market is about understanding a couple things. Number one, if you move in order taking mode, you got to remember that everything that we do every day, every behavior that we go through, everything that we do, we're building habits every single day. I train loan officers on this all the time. If you're selling the right way in a low market where there's not these really low rates and you've got more competition and you have to work harder to get those deals, but you're really spending time in relationship and you're really doing it right, and then you move into these markets and you drop all that, when those markets come back, which they always do, this too shall pass, like everything, you're going to be in the habit of this quick transactional order taking, get it done, get on to the next one. And what happens is you go from hero to zero instantly. You don't want to do that. What you want to do is you want to take this marketplace and you want to capitalize on the marketplace. And you want to be the best refi loan officer in the country when a borrower talks to you. So rate doesn't become an issue because you don't deflect that, but you're also building that longer term relationship and not just trying to run through as many deals as you can to make a bunch of money now and then pay the price later. You want to build your foundation for the rest of your career in this time we're in.
Yeah, and one last thought before we unpack strategies and tactics. Maybe we'll get a script out of Dale. Remember, if you have questions, put them in chat. I will look at the questions for everybody who's watching this live, but it's also time. I mean, you're super busy, and do you want to be able to have the most concise conversation to win the trust, the deal? Do you want to be as concise as possible at locking in that loan so that you don't have that client going, hey, what's rates? Like, it's all about efficiency and effectiveness. And I do believe that there are loan officers in this market. No, I don't believe, I know to be fact, that are closing 70, 80 loans, and they are super effective at the front end. They're super effective through process. They don't get rate shop. They don't get price exceptions. They're killing it. And I know loan officers that are struggling, doing good business. I mean, if you're not doing good business right now, then you're not trying, but they're doing good business, but it's sloppy, it's messy, and it's frustrating. And so think of efficiency. So Dale, what are some of those tactics and strategies that need to be done?
Yeah. So I want you to think about this for a minute, all right? Every borrower, their first question traditionally is going to be, or second question, what's your rate? It is the most conditioned response question that we deal with in the mortgage business. Yeah, Dave, I see every day. I've watched tens of thousands, maybe hundreds of thousands of loan officers in action that freeze up when they get that question. That is the one question we should never freeze up on. That's the one question we ought to have the best answer to. So I'm going to frame it by giving you guys some strategies and tips and some rules that you need to understand about handling rate. Okay, so here's rule number one, all right? The rate question is actually not a literal question, but we treat it like one. It's a figurative question. Why do I say that? Well, here's why. If you were to say to me, what's your rate, Dale? There's only one possible honest answer. You know, we talk about integrity all the time, and integrity is obviously critical to our success, and it's what we base everything we do on. But did you know that rate is actually an integrity issue? Because here's the deal. If you say to me, what's the rate? Here's my only answer. I got no idea, son. None. Now you go, oh, wait, hold on. I couldn't say that to somebody. Well, let me explain to you. That's not exactly how I'm going to say it. I'm actually going to teach you how to say it in a minute. But it's the fact of the matter that asking me my rate, I have no idea what your rate is. Nobody has an idea of what the rate is on the front end of a call. Why? Well, whole lot of factors. I don't know you personally. I haven't spent a minute with you yet. And here's the deal. until I know three things about you, three things, not one thing: your qualifications, your situation, and your goals. That last one is the big one. Now, here's the deal. You hear this all the time. You have borrowers say to you things like this: hey, look, I've been quoted 2.75. If you can't beat it, don't waste my time. Who's ever heard that one before? I always smile when I hear that and go, congratulations. It's an awesome rate. You must be highly qualified if you got that kind of a rate. And if you're not highly qualified, man, I can't wait to say my rate is. But here's the fact of the matter. I don't yet know my rate because I don't know a couple things about you that are critical, which include not just your qualifications, but the product you're looking for, the program you want, the term that's best for you, the configuration of the loan, how you want cash, if you want cash. There's like 90 other things I need to know. So here's the deal. I know you have an 800 FICO, and I know that you are expecting the best rate, and you're going to get it from me because you're the best qualified borrower I've talked to all week. But I still won't know your rate because here's the problem. Without knowing your situation, knowing your goals, and knowing what you're trying to accomplish in the end result, not just short term, but long term, I can't tell you the rate and have it be meaningful. See, here's the deal. You have three quotes from three companies, none of which you completed your application, none of which verified your information, none of which knows the value of your property, none of which knows if there's title issues, none of you that knows any of that because you haven't completed an application. For me to give you a meaningful quote, all I need to do is take 20 to 30 minutes of your time to get a full application, verify your information, and I'm going to give you an absolute, accurate, meaningful quote that you can actually make a decision on versus a meaningless quote based on somebody telling you it's their lowest without knowing a single thing about your situation.
Can I add some other footnotes to that? And I actually think the word I'm going to use right now in a little soundbite I learned from you 20 years ago. It went something like, I have to ask you these questions, and then the word exactly, and then I'm going to tell you exactly what kind of rate I can get you. And the only other footnote I would add to that, guys, because you're in the mortgage coach community and you want to make everybody you compete with look like the villain before they're the villain, I'm going to give you options and I'm going to help you compare those based on your goals. So you're going to know the total cost of my loan over 3 years and 5 years. Yep. If you're talking to other lenders, you're just getting a fee worksheet, rate, payment, cash to close. They're not going to give you the transparency of what that cost over 5 years. And they're not going to give you the transparency of what that will cost you over 7 years. Now they'll tell you what it costs over 30 years because by law, they're required to do that and provide you with the disclosure. But guys, most people don't have a loan for 30 years. So what matters most is the cost over different periods of time. So a couple cliff notes. And I do know I learned some of that firsthand from you back in the day.
I love it. Here's the deal, Dave. You have to understand, because I know that there's several in the audience right now going, okay, wait a minute, hold on now, Dale. I don't really see myself being able to say that to a borrower and get away with it. Well, that's because I haven't given you the rest of the story yet. I'm going to get to that. I'm going to give you the Paul Harvey here in a little bit and give you the rest of what you need to say. But here's the bottom line. You need to start every single conversation from a foundational understanding that without having the right information and a complete application, a rate quote is meaningless to every borrower on the planet. Can we all agree to that statement right there? And we all can. That's very true. I'll give you an analogy to bring this into play, okay? So Dave, let's imagine for a moment that you or I, either one of us, go to the doctor today. We don't feel good. We're probably the kind of people that don't go unless we think we're going to die, right? I walk in, I say to the doctor this: hey doc, I'm sick, I don't feel good, but I'm in a hurry. I'm a busy person, so here's what I'd like to do. Could you just tell me what's wrong, write me a prescription, and I'll be on my way? What will the doctor say every single time? I'll tell you what the doctor will say. Absolutely not. Why? Because without an examination, I cannot provide a diagnosis, because that would be medical malpractice. You know what? We commit mortgage malpractice all the time in the mortgage business. We quote rates to people up front without any knowledge of their situation. And here's what happens. There's 3 rules to rates you need to understand. I already gave you the first one. First one is rates down a little question. Here's the second one. No matter what you quote them, it's going to be too high. I guarantee it. And here's the third one. No matter how low you go, somebody's going lower. Always, every time, no questions asked. That's the way the mortgage business is wired. I used to do this. I used to love to do this. Borrowers would say to me, I'm looking for the lowest rate. Who's ever heard that one? Now, I don't know what your answer was. Here was my answer. I go, oh, it's great. Can I ask you a quick question? Do you happen to know how many companies have the lowest rate? And they go, no. I go, oh, it's just one. Now, here's the problem. There's like 6,000 lenders in the U.S., which means you got 5,999 more calls to go to find that guy, because I don't know who he is. And here's the problem. By the time you find him, he ain't going to be the lowest anymore because rates change all the time. Everything I just said is true. The fact of the matter is, rate quotes up front without information are meaningless numbers that borrowers put stock in as if they're truth. Here's your job. Educate the borrower. So Dave, if you say to me, what's the rate? Here's my first answer. Hey, Dave, that's a great question. I'm so glad you asked me that. Before I get into that, let me just take a few minutes. I want you to know a little bit more about me and what I do differently from others, because what I'm going to do is customize a loan for your situation that is going to save you more money in more ways than anybody else you've ever seen before. And if I can't prove that to you, you're welcome to go somewhere else. It's that simple. Now, if they come back and say, what's the rate? I go, oh, great question. Don't know because I don't know anything about you yet. But as soon as I get an app, I'll tell you, I can assure you this, your rate's going to be awesome. I'm super competitive. I promise you that. And we're in a commoditized market where everybody's got low rates and we're all within an eighth of a quarter of each other for all intents and purposes. But more important, I'm going to save you more money in more ways and show you how to save money in the long term, not just the short term. And that's exactly what Mortgage Coach does.
Love that, guy. So we just got a script, we got strategy. And I do think, you know, the tone that we're taking, we're talking about the grinder. Like, you know, there are people that just come in, hey, I was referred by such, what do I do? So realize we wanted to help you guys with the grinder, but let's also remember that lovely referral that comes in that I trust you and we're all good to go, and they become the grinder. So we're going to cover some strategies in a minute here, like what happens. We won the deal, they're moving forward. And then guys, the other thing that's happening in the market right now is that rates go lower. You know, we get them locked in, they're committed, and rates go lower. Are you setting the right expectations? When you lock in a rate, the way a pro locks in a rate is different than the way a non-pro does. Listen to my interview with Amber. I'll put a link down below. She did an incredible rate lock script. You know, the way she locks in refis is distinguishingly better than how most loan officers do. So remember, guys, to win, remember, not just win the loan, not just optimize profit and reduce price exceptions, to win clients for life, to wow people, and then to do it in a way that saves you time and is efficient, you got to have the right script up front. You got to have the great presentation of value. And then when you do lock in the rate, you've got to lock it in and communicate properly. And then, of course, you got to execute. So what's next on the Dale Vermillion checklist? What do you want to cover next?
So look, here's the key. You've got to, again, remember that rate quotes are meaningless without information. You got to educate your borrowers. You got to acknowledge when they ask you the question, great question, I'm glad you asked me. Don't be defensive. Don't be argumentative. Don't create an environment where they feel like you're dodging them or you're trying to move away from them. Be very accepting of their question. Hey, that's a really great question. I'm glad you asked me that. But then educate them on top of that. Ask them for a minute up front. I've always taught loan officers what you want to do is you want to just ask for a minute right out of the gate. Now you have 60 seconds to talk a little bit about your credentials, to talk a little bit about your service, to talk a little bit about your customized programs, talk a little bit about the benefits you're going to provide that borrower that are separate and unique from your customers. And you've got a customer listening to you. And look, no matter how many times they ask you the rate, I want to remind you of something, okay? If I were to boil this down, and I did this with many borrowers over my career, and I've taught this to loan officers for 25 years. If the borrower keeps pressing you on rate, all you have to do is ask them one question. One question. Why is rate so important to you? What are you trying to achieve by getting the lowest rate? See, there's a reason they keep asking for it, but they've never thought about that reason. And here's what I know the answer is going to be. It's ultimately going to boil down to this answer. I'm trying to save the most money. Well, let me tell you what I know. And let me tell you what Dave Savage knows. And any expert knows this business. Getting the lowest rate does not equate directly to saving the most money. Getting the lowest rate only dictates getting the lowest rate. You can get a low rate and a bad loan because that loan officer didn't configure it right, didn't provide the right term, didn't provide the cash you needed for the right purposes. There's a lot of things that can improve the value of a loan for a borrower depending on their situation. So what you want to do is you want to make sure that you're not argumentative. You're not taking it like, a lot of times what happens is customers come in very defensive and very strong, and then we put the wall up. Don't put the wall up. Remember, they're asking you a condition response question because they don't know what else to ask you. What they really want to know from you is how much can you save them at the end of the day. So if you boil the question down and say, what are you trying to accomplish? Well, I'm just trying to save those money. That's what I'm going to do for you. I'm going to show you how to save money in multiple ways beyond my competition. If you'll let me do that, and I promise you, I will do that. If you'll let me do that, then you can make a decision. And if you don't love what I did and you don't think I'm the best, you can work with someone else. Well, here's the beauty. By that time, if you take a good app and spend 45 minutes with the borrower like you should to build a really good relationship, identify their goals, get to know them, they don't want to do it again with somebody else. Let me say one more thing. Dave, this is so important. This is your biggest enemy in the mortgage business, right here. Why? It hears everything you and I say. It hears everything your customer says. So here's what happens. Everybody's got a smartphone. Borrowers are getting triggered by credit triggers the minute you pull a credit report. So they're getting lit up with that. But they're also talking with their spouse, talking about their mortgage refi. They're going online, and there are bots in every phone. There's marketing bots that are sensing that, and they're getting pounded after that. How many times have you sat around and talked about some product you've never had before? You go on Facebook, and sure enough, there's an ad for that product. Happens to me every day.
That's a huge point. I don't have data on this, but I can imagine that every single person that talks to a lender is, next thing you know, and I'm not going to name names of national brands that have rocket scientists working for them, but they're getting email, text, and Facebook ads around mortgages. Right. And so guys, you have to assume you're always getting shopped. And so you got to ask great questions. I want the one takeaway from what Dale just shared. One of the ways you differentiate is goals. And I know this. I just had a top producer, Brian Morley, $100 million producer with Fulton Bank. He's buying a house himself. He went and decided, hey, this weekend I'm going to shop 6 different lenders. You know what all 6 of those lenders didn't do? They didn't ask him what his goals were. And so if you're competing against online lenders and other loan officers, most are not asking what are your goals, and then they're not showing presentations that achieve goals. So make sure you get a takeaway from that. Anything else you want to cover on the front end before we get into how we present the proposal? How do we, hey, this is what I could do for you. Anything else you want to cover on that?
Just remember that your tone matters a ton. Like, you have got to come across confident. You have got to come across knowledgeable, and you got to come across enthusiastic. If you're not enthusiastic, why would they be enthusiastic? I mean, it really comes down to good presentation and confidence to understand your business. If I know full well that I can't quote an accurate, truthful, honest rate to a borrower, on the front end, 100% of the time, and they come in and they're the strong pushing rate shopper, I can be so confident and say, Mr. Jones, I know you keep asking me the rate, but the answer's the same. I won't know, but I got 3 quotes. Yeah, you got 3 quotes that don't mean anything because they haven't done the job right yet. Remember, no diagnosis without an examination. Keep that in the back of your mind. So if you can confidently say, look, what I want to do is get an application, spend time with you. I'm going to give you a full-blown offer. Now you got something to work with. If you don't love it, you got something to shop with that's actually meaningful now. It's actually going to improve the experience. Why am I willing to say that? Because I'm confident they're not going to want to work with somebody else when I'm done with them. Why? Because you got to remember the most important piece of the entire puzzle. Okay, I've taught this before, I think, on your podcast, Dave, and that is the triangle for success. Value, relationship, and differentiation are the 3 things that make us successful. Well, if you were to ask me which one of those is most important, it's relationship. It's relationship. You have to have that borrower in a position where they don't want to just buy, they want to buy from you personally. How do you create that? Through differentiation with things like Mortgage Coach, where you provide options they haven't seen before. by creating a value prop they haven't heard before, by giving them service and being high integrity and educating them in ways that nobody else ever has before. That's how you build relationship. If you do that, you are going to win big with that customer, and you're going to stave off a lot of those competitors. And remember one really big tip. Time is your friend, not your enemy in the mortgage business. You're actually better off slowing down and spending more time with the borrower than rushing up and getting off the phone. Why? Because the more time you spend, the more you block your competitors. The more time you spend, the more relationship you build. The more time you spend, the more you know about their goals. The more time you spend, the more you can fix their situation. Remember, a mortgage is the single largest, most personal financial investment people ever make. Their goal is not just to lower their payment like they tell you every time. They have a lot more goals than that financially. You can't solve what you don't know. So you've got to ask the right questions and spend the time to nurture the relationship, and then you can provide incredibly powerful results and solutions that make a difference.
All right, we're going to transition in just a minute to the best practices of how to present your options and your strategies, and how to get the commitment to move forward. Before we do that, David Robinson just said, what types of goals would be related to the low rate question? And David, I'm going to give a quick answer to that. I mean, first of all, be curious. Like, I'm going to, Dale and I will give you some options, but I mean, ask people, what are your goals with this house that you're in? What are your real estate goals? And if you have to lead them, do you want to own a second home? Do you want to buy investment property? Is this your forever home? So those are some things. I'll add some more, but Dale, how would you respond to David, who just asked that question?
Well, David, great question. And the answer is they're financial goals. Look, a mortgage is a financial investment decision. It can affect every part of your other financial investment decisions. So let me give you a simple example. Emergency reserve. Okay, I wrote a book for consumers in 2010 titled Navigating the Mortgage Maze. I do radio programs all over the country. I've done maybe thousands of them at this point in my career, and a lot of media stuff on this. And the number one mistake that I talk about that consumers make when they buy a home or they even refinance is that they do not retain reserves. They will go out and buy a home, take all their money, put it down on the house to try to get the lowest payment possible and do nothing to protect their family. That's a massive mistake. So you want to ask them about what their financial goals are. Let them just talk to you. Let them just open up with you about what they want to do. And you know what's going to happen? They're going to start spewing out, well, I want to do this. I want to buy that second home someday. I want to buy that big boat or be on vacation. I want to retire at this age. They're going to tell you all kinds of things that directly affect the way you build their mortgage loan. It's helping them identify what they want to accomplish and then solving that. That's what great salespeople do.
I love it. And David, I'm going to put a couple links to a few TCAs, total cost analysis, in here just so you can see some examples. And maybe we'll even show one and talk about it in a minute. Let's move forward, Dale. Let's say we've got the buy-in and the commitment to do the loan with me. They, fill out whether it's my online app through Simple Nexus or whoever, or the loan officer does it. He, takes the app, he's presenting his options. I've got some best practices, but what are some of your best practices when presenting options?
Well, here's the number one best practice. You darn well better make them write it down. Get them engaged. Make sure that they're involved and they're partnering and collaborating with you in the process. That's critical. And here's the second rule. Don't offer them more than two options at a time because you confuse them. You don't want to overwhelm them where they say, oh my gosh, this sounds so great, but can you send it to me because I'm so confused now what you said. You don't want to create confusion. You want to create clarity. That's what you're trying to do. So those are really, to me, the big pieces that I really focus in on is making sure that I'm taking my time, getting them engaged with me, getting them to interact with me in that process, not just me speaking and they're listening and they're drifting off on their email or their text messages while I'm talking. You got to make sure you've got an engaged customer. That's so critical.
I love that. Good advice. And one more suggestion. I have been hearing more and more that when you are competing with online lenders, or when you hear that uber low rate, assume that it's a 2-point quote, so that when you're walking into the option conversation, you're giving them a 2-point quote. I know a lot of referral-based purchase first loan officers, you have your issues. I'll never pay 2 points. Always do a no cost. Guys, just know that when you're competing with a lot of online lenders, they're going to have the lowest rate and they're going to buy it down, and they're going to have that as an option. And in some cases, they're even going to sell it. So
Yeah.
you need to give options, and you need to be intentional about that. Hey, Dale, do you mind if I pull up a refi presentation from an interview that I did yesterday with Amber Kovark? So,
Not at all.
and let's just break this down, and Dale and I will share kind of the art and science. And so I'll go first. So this is a purchase first loan officer. She closed 45 loans last month. So she kills it. She's got a team. She's purchased first. I can't remember the number, but she knew exactly how many of her 45 loans that she closed last month were from past clients. So she's doing a great job. I want to say it was 14 of the 45 were past client loans. And here's what she's doing. So she's purchased first. So she's working with realtors and doing purchases during the day. She's a mother of 2. And at night, she's putting refi proposals together. So based off of conversations she's had, apps that she's had, and she's in column A, she's saying, here's your current loan. In column B, she's saying, here's your refi and your monthly savings. And then in column C, she's saying, hey, what if we refied, but you kept making the same payment? So you took that payment and you prepaid it every month, you'd pay off your house in 21 years. So Dale, what are your thoughts on that strategy?
So I'm gonna share a scripture that I love that really ties into this. It's Romans 13:8, and it says this: "Owe nothing to anybody except your obligation to love one another." That is the life we all want, right there. I joke all the time when I train. I say, you know what? We can't live that because we owe, and off to work we go. Okay, we're all the 7 dwarfs. Okay, here's the bottom line. That is a very sound strategy. To David's question earlier, right there is one of the goals. I don't know any person that if you ask them the question, would you like to have debt the rest of your life, is going to say yes. Nobody answers that. No 5th grader says, when I grow up, I want to have debt. That's not what they say. What people want to be is out of debt. That's what we want to help them to do. I've always been a proponent that if you really want to be successful, you've got to show customers different ways that they can build their loan and get them thinking about the long term as much as the short term. Most transactions are short term based only in the mortgage business. Great loan officers give a comparison to say, okay, this is what we can do in the short term. If that's really your need and your goal, we can get the lowest payment for you right now and save you this much money. Or we can show you a long-term alternative that helps you get in even better shape if you feel you can afford that and you've been making those payments anyway. Dave, I love that because term reduction has always been near and dear to my heart. It's always been the number one thing that I focus on. And it's always been, I believe, the biggest benefit we can create to a mortgage borrower.
Love that. So I'm going to go back to this strategy, cover a few more things that I think are important to it. I want to show one more strategy. But guys, when you can save someone that amount of money, it's always important to talk about savings over time. So every one of your competitors is going to focus on the monthly savings. Amber is going beyond the transaction. Remember, she's playing a different game. She's not just trying to win a deal. She's trying to win a client for life, and she's trying to wow that customer. So she's going to talk about the impact over time, and she's even going to take it long-term and short-term. So guys, those are the best practices. Every refi, go beyond the transaction, and the transaction is the payment savings in the interest rate. Beyond the transaction is becoming debt-free faster and value over time. One more strategy, Dale, and bring it back to you. She says a lot of my clients, and I just asked her, hey, what's the biggest and most common kind of new strategy you're having right now? She's like, well, in my market, there's not a lot of inventory. People have a lot of equity. And she's like, a lot of my families, they don't like the house there anymore. You know, after however many months of quarantine, they want a bigger room. This particular story, she tells it well. It was a family that had an extra child and they wanted another room. So she was having the refi conversation. And in this case, a refi would have lowered her payment by $322. She goes, but they had said that they're not digging their home. They'd kind of like to see what it looks like to move up. And so one of the options, which would be selling your home and not putting in the full down payment, like they were going to get like 150,000, 170,000 in equity, but don't put it all in the home. Do 5%, buy a new home, and put 125,000 in the bank. So get liquid and get the home, option 3. And then option 4 was buy the new home, and when you sell the other home, recast and lower the payment. So here's the deal, guys. From a cash flow perspective, buying the home and putting money in the bank increased their payment by $500. Refi lowered their monthly payment by $322, and move up with a pay down and recast lowered their monthly payment or raised their monthly payment by $164. But guys, here's the deal. Here's the money. Option 3 took their net worth based off of their belief. Like, we think our house is going to appreciate. We currently are getting 6% on our money in interest bearing accounts. So option B, sell the home, get more liquid, would give them, what is this? Almost $500,000, $400,000 in net worth. Guys, that's going beyond the transaction. Now you are delivering transformational advice. What are your thoughts on that one, Dale?
Well, I mean, the answer is obvious that, look, everybody has different needs. And a lot of that depends on what age bracket you're in, what economic and socio-economic bracket you're in. I mean, these things all drive that. So if I'm having a conversation with somebody who's 55, it's a very different conversation than somebody that's 25. And that's a very different conversation from somebody that's 45. Because at these different stages in life, we have different goals. You know, the younger first-time buyers, they're trying to start to build their wealth. They're more sensitive to monthly payment and those kind of things. You get to the 40-somethings, now they probably are pretty stable in their incomes. They're more focused a lot of times on building wealth outside of that. So those options become strong. And those 55-year-olds, they want to get out of debt because they're starting to look at retirement is staring them and glaring them in the eye. And look, I'm 59, so I get that. I mean, you know, you look at that and you start to realize that there's different goals that people create in different times of their lives. You want to be able to accommodate all of those things. That's exactly what Amber did in that. And that's exactly what she did through the mortgage coach approach that she took. So options are always better than none. We talked about that last time. You know, one option is no option. You've got to provide multiple options to a borrower so the choice becomes theirs and the choice doesn't become yours. And that's exactly what Dave was showing, and it's very powerful.
So that reminded me, the last interview I did with Dale was amazing. We both loved it so much. We wrote an article that would just help bring some of the ideas to life. And think of it as like a study guide. When I create content like this, whether you're an individual loan officer, whether you're a branch manager, I want to create content that you can consume video. I want to create content that, you know what, if you don't want to have the video on, you want to listen, it's like a podcast, great. And I want to create content so that you've got something to read and follow along. So I'm going to put a link down below to our last interview and a link to the LinkedIn article that we did. And we put some time into that. And we did that, guys, because we want to make change. I mean, we're going to close with a little bit of Dale's bigger passion in life and the change and the impact he wants to make as a man and as a leader. But we create this content because we just want you guys to kill it. We want you to be successful for yourselves. And I do believe that the best salesperson obviously helps themselves. They close more money, they make more money, but you know what? They also are the most valuable to the consumer. And so we deliver that value. So we've got a couple comments. So first of all, Jenny Mason says, love listening to Dale and Dave. Thank you, Jenny. We appreciate that. David Robinson, dude, thank you for, you know, your nice words. He also had a question. How does she say in the video? Anyways, I think what you're saying, David, is what is Amber saying in the video? And if you click on the link, I had asked her, Amber, you're killing it. I mean, you're closing, she consistently closes over 200 loans a year. And right now she's on pace to close over 400. So she's a special originator that is not only great one-on-one with people, she's a great team leader. I said, I want you to, Amber, do me a favor. And in the 1-minute video, and I think it was 90 seconds that you put on that TCA, speak as a leader to the mortgage coach community. So listen to what Amber says, listen to that video. But here's the best practices. And Dale, I want you to either add to this or validate this. When you put a video on a total cost analysis, always say the family's name, so people like to hear their name.
Yep.
Always repeat back the biggest goal. Whether it relates to the total cost analysis you said, name, biggest goal that you took from listening. So you're showing them, you're knowing them. Do not get into the minutia of explaining every nuance within the total cost analysis. You want to name, goal, and then give them a 30,000 foot level perspective of what you've delivered to them and why. And then if you do, like if you think you've given enough comprehensive information that they can like pick which option and email me back, think of it like when your close is like service. Like don't close them if that's not good service, but if they're at the point in the process where they could just text you an option, that's good service. So your close should just be what's good service based on how much I know about them, how much we've talked, what I've delivered. Respond with a way that makes things easy. Anything you want to add to that in terms of the video?
No, I mean, what you've really said there, and I've preached this for my entire career, is do not create analysis paralysis. That's what we do sometimes, is information is great if it can be disseminated. It's not great necessarily if it's overwhelming. So you want to make sure, again, I'm going to go back to what I said earlier, clarity, not confusion. That's what you're trying to create. You're trying to show them the benefits. I love what Dave said about, showing that you're knowing. That ties right into the others first mindset that I teach all the time about, putting your customers before yourself. It's all about their goals. It's all about pleasing them. If you make your customers happy, they buy from you. End of conversation. I haven't met Amber. I wish I would love to meet Amber, because just hearing Dave talk about her, she's got all the characteristics I feel of all top performers. They're liked by other people. That's why they're top performers. So bring that human element in, because otherwise it's just numbers. You can get beat on numbers by anybody. If all you think is your numbers are going to win the deal, you're thinking wrong. It's what I call stinking thinking. What you want to instead do is use those numbers to tie them to the personal goals to create the human connectivity, so you show them that they're coming before you, they're first to you, and you want to do the best you can for them.
Love that. So my closing thought, guys, is referencing another interview I did with Craig Spence. That's Craig with a K. And what made me pull this up is something that Dale said. He said, well, I don't know exactly what you said, but it's like, you want to give them not too much information, just the right. And I'm a big believer, like too much information is just as dangerous to conversion as too little. And one of the things I love about Craig Spence, and it reminded me of it, is that when he is doing the TCA with the family, he's building out the options. Like literally when the family gets on there, go to your desktop and click on it. He starts with one loan and then he adds two, and he's got that second loan ready to go. And sometimes he may not even show the third, because it's tailor and teach, ask great questions, and then personalize. And you may go from one program to 2 programs to 4 programs and back down to 2. So just, I hope the takeaway is, when you present, for all you mortgage coach, too much is just as dangerous and just as bad of service as too little. And just remind you guys, with mortgage coach, you can add programs, subtract programs. So Dale, I want to close. Well, first of all, before I close on a personal note, anything else you want to make sure people get just from a tactical level to win in this online marketplace? Anything you want to make sure gets covered?
Just stay in touch. Common mistake, Dave, that loan officers make is we do a really good job all the way through the application process. We build a relationship, we do it right, we get the deal, and then we go in the black hole. Then we let our customers, we just literally release them. And look, I'm not talking about processing your deals. I'm talking about staying in touch with your customers during the process to show them that you meant it when you built relationship. Because look, they're getting hammered. You want to have open ears to hear if there's any kind of change in voice tone or concerns coming up that tell you that they may be thinking about another lender. You want to stop cancellations before they happen. So if you stay in touch, you continue to work with them through the process, schedule it in your day to make your calls to all your clients that are in pipeline and just check in with them, make sure they're doing okay, make sure you're making a touch. That will help your closing percentages dramatically, and it will help just really put the icing on the cake for everything else you're doing. I'm not giving you other tips, but that's just one.
All right, so we got 5 minutes before we have to wrap this up, and I want to ask you this question. So I saw this speaker from a company called Dear World several years ago. I think it was a Lenders One conference, and it was incredible. And they were showing, they weren't tattoos, but they had written on people's body parts words that gave people power.
Yeah.
And I'll never forget this experience, because one, I think I cried multiple times during the presentation, hearing people's stories. And then they said afterwards, hey, come on to the back of the room if you want, and we'll put some words on you and we'll take some pictures of you. And and I don't remember exactly how they asked me the question, but it was just like, you know, what are two words that just you're all about? And I'd never been asked a question like this. And I just said, I'm always grateful and always curious. So it was like one arm, always curious, one arm, always grateful. And you guys have seen that picture. I'm proud of it. I mean, it was something that was defining for me, you know, that these are things that I'm all about. And some of them are truly God gift. Like I do not think the curiosity I have and the way I turn bad things into good things is just like my skill. I think it was a gift that I had at birth. But Dale, with that said, if you were you didn't have to tattoo them, but we were gonna write them with big old selfies, what words would you put on your arms right now?
You know, I think my shirt almost says that when I talk about being a humble hero. You know, I think that the others first mindset that I've always talked about, you know, do nothing out of selfish ambition or vain conceit, but in all things with humility, value others above yourself, looking out for their interests and not your own. That's my life verse. I mean, if I had to say what it is, you know, today it's about having purpose that's beyond you. That would be the most important thing to me, is having purpose beyond myself. Because look, we are very blessed to be in the mortgage industry. You know, this is an incredible business where we can make incredible amounts of money. And there are people starving all over the world. I mean, if there's one thing I've known, I've had the great privilege to travel all over the world, and I've been in third world countries. And in 2002, my life exponentially changed, Dave, when I stepped my first time into central India, actually to meet these girls you're seeing right behind me for the first time, and spend time in 12 villages to meet people that were dying of starvation and dying of disease and had no money and no hope. And it changed everything. And my whole purpose changed from making money to giving away money. And it's been that ever since. And, you know, having a purpose beyond ourselves drives us and motivates us. People say to me all the time, my gosh, you are so energetic. I saw you speak 25 years ago. You're just as motivated as you were then. Why? Simple. Here you go. It's my purpose. That's what drives me. You know, we have for years, through Mortgage Professionals Providing Hope, the not-for-profit that we built in 2006 as a result of that first trip. You know, this is the MPPH home that we built for 550 girls in India that had a home that were homeless. We've housed 200 families here in the States in the last 2 years who are all homeless, mostly single moms. We've educated and housed kids in Guatemala who live in garbage dumps in tents, who are being killed daily. Like, these things are things we can do. There's so much opportunity, Dave, to make a difference. Go be great at what you do, make a ton of money, and then take a slice of that and give it away, because you know what? You won't miss it. I promise you that. It's the way it works.
So what's the website people could go and learn more about your bigger mission?
It's mpph.org, Mortgage Professionals Providing Hope. It's a not-for-profit charity, and I will say this, 100% of the money we take in, we give directly to the organizations we work with. And we have visited all of them. We know all of the leaders. We know how they use their money. they're incredible organizations that are making a difference. So we are trying to make a difference with very high integrity, very ethical people who are working with orphans and widows and homeless. That's what we focus on. It's educating and feeding and housing. That's what we want to help with.
Love it, guys. So we'll put a link down below. Check it out. And if you give once a year, you give a few times a year, consider Dale's mission. And I love the fact that it's mortgage professionals. It's mortgage professionals giving back. One last question. If someone was listening to this, they're a manager and they want to hire you to speak, I know you have online programs for coaching and training. What's the website and how can people get to you on that?
So dalevermillion.com is probably the best place to go to. You can go through that and find out about our online training classes. You can find out about our live training and live simulcasts that we do all over the country, consulting with executives. I do all of that. I've done it for 25 years. Like I said, we work with 600 lenders. So be glad to work with any one of the clients. And Dave, I just want to thank you. I appreciate you having me back. It's always an honor to be here. You're doing such a great thing in the industry with what you do. Keep it up, because you're making a big difference. Really appreciate that.
Thank you, brother. So guys, if you're watching this in YouTube, Facebook, give it a like, share it with your mortgage friends. Dale Vermillion. Until the next time, brother.
God bless you, my friend.
God bless you. Appreciate you, man.